Let's compare the British pound in the futures market, which is June's contract, versus the pound US and the Forex market. I have them both. Let's compare and let's see the difference and the similarities. First of all, I'm looking at the British pound and it's retracing up, as you see. The area that is retraced up to, it looks like a resistance area. There's a lot of demand. There was a lot of demand in this area, as you noticed. This is a point of control. In our teaching, we call this a knife. It's a straight, it looks like a knife, straight blade. But there was a lot of interest here, and it turned to a point of control. If you go back, you see it was a point of control, not now, but a while back too. See, it's orange, then slowly turned to red. The top of it represents resistance. Not only that, we have a power line, as you see, the green line, and there's another one on top of it. Not only that, if you do your Fibonacci retracement from the top to the bottom, you notice that we have touched the 78% retracement, or about to touch the 78% retracement. I'm not sure if we touched it. And then I have the 60-minute chart. Also, for the same reason, the volume profile is very large in this area, so I'll just reduce it. So you see, and if you do your Fibonacci again, from the top of the wave to the bottom of the wave, we are sitting approximately the 79% retracement or 78% retracement from the top. So expect a resistance and then a move down after that from this area. So it might come back down from here. We don't know yet, but again, this is a good resistance area. Keep in mind, this is the daily chart. Look at it closely. Look how it looks. See how it looks? Okay. And this area looks like this. Let's examine the pound US and the Forex market. Okay, I disconnected the data feed for the futures. Now I connect it to the Forex data feed, and look at this. It looks exactly the same. So there's a lot of chatter about volume profile does not work with Forex because it's not centralized. It's all different now. I mean, the data feed that you get through Forex nowadays, especially if you have a good broker, it's as good as futures data feed. Look at this. It looks exactly the same. This is the daily on the Forex, and this is the daily on the futures. Look, same one, same thing. Let me remove these lines here, the Fibonacci levels. Same, look, same thing. And this is the daily on the Forex market. And if I do this Fibonacci retracement, it is kind of touching it touched the top. So now if I look at a smaller chart, let's say a 60-minute chart, you expect the market to go to probably come down. That's the idea behind this video. The volume profile, the data feed it's now all of them are connected, and the volume profile it's a very accurate representation of Forex, and at the same time works perfectly with the futures market, of course. This is the weekly view on the Forex market, the Forex currency pair, which is pound US, and this is the weekly view for the futures June contract. Look at this. It's almost exactly the same. I mean, if not perfectly the same. Look at the low volume area. Look at the colors changing from red to green to blue and then to gray. This represents a low volume level or low volume area. Look at the same here, right? It's exactly the same. Let's now examine the E-mini S&P and the futures market. This is the hourly, as you see. Take a look, take a mental picture of this, right? Let me smoothen the edges here. Notice this area has a huge demand. Current area, we have a point of control right below the price, right here. There is a value area here, low volume in this area with a bump. So take a mental picture of this, right? And let's look at the SPX USD, which is in the spot market. It's a CFD. And this is your SPX USD in the spot market. It is a CFD. Look at it. Very similar. Very, very similar to what we had with in the futures data feed in the futures market. Okay. Look at the bump here. Below, closer to this low. This is ES futures. The bump closer to the low. There was another bump below here. Another bump below here. So two bumps. And this line right in the middle. See this? For example. Point of control here. Bumps here. ES. Two bumps. And there is a middle in the middle. The opening in the middle. Point of control here. Kind of different color, but it's the same. And you see the similarity, folks. The difference between the volume profile on the spot market, SPX USD versus the ES. Very, very close. The currency pairs are almost 100% identical, almost in most cases. The CFDs, very similar, very, very similar. Maybe not 100%, but as you see, very similar. See this? This is the ES. Just take a mental picture of everything. And this is SPX USD, and this is the ES. Right? And let's examine the XTI USD, which is the US oil, or the CL and the futures market, crude oil. This is an hourly chart, and this is how it looks like, as you see. If you see, let's see if we have some distinguished bumps and valleys, etc. All right, so this whole area is a high volume area with a point of control right in the middle, or as known as a knife, right? Low volume, and then at 75.50 there's also a low volume. So 80 is a low volume area. 75.50 it's a lower volume area. Between 76 all the way to 74 actually. It's a lower volume area. Okay? And there's a bump on top and then smaller bump at the bottom. This is the crude oil futures market. 80 low volume. Between 76 and 74 area low volume. A bump on the top, and then a smaller bump at the bottom below that. Crude oil seems very similar, almost identical. So again, volume profile works if you have the good data feed, the proper data feed. Volume profile works on the futures as well as on the forex market. Same thing, similar. I use both all the time. But for example, if I want to look at a crude oil trade using the spot market, which is a CFD XTI USD, I would also look at the CL at the same time. They always look the same, identical.